Greetings, market rebels. Welcome to this week's macro measure. It is Sunday, June 25th, 2023, and it's about 10:15 here on the East Coast. I'm Wayne, my partner Ryan's working on the market outlook overview, which will come out later today. So we need to just take care of some business and then we can get into our weekly discussion. Here's our trusty disclaimer, and then here is our trusty intellectual property rights notice. And let's get to this stuff here. So this is the plan program for this week. Some of it's kind of carried over from last week, with some of it just adjusted slightly. I think there's some key adjustments and comments we'll hit on. I'm going to rearrange things a little bit and then get us going on what we really like to do in terms of showing charts and covering this material. So let's see if I can get that to switch over so I can see my screens properly. And we will go back to this. Oh, doesn't like the screen for some reason. We'll do screen 4 now. I should be able to move things around. So I'm going to cover that plan program, just get that taken, get a sort of just a few browser tabs taken care of, and then I'm going to get into the charts that way. So the review and summary, top of the program, is we expected really, right? I think this has got the wrong, actually it's got the wrong information in there. It's skipped over it. Now, let me bring this back over. I just want to make sure that you're not operating off of the old stuff. And this way everybody can take a look at this here. This is really what we're going to be covering. It looks like it may have skipped over that for some reason. Had a little bit of an error there. I don't even know in Zoom, so I don't even know if that showed up, but hopefully I won't have problems. This will record, and let's make sure that's still happening too. Nope, looks good on that. So we'll leave this up here for another minute, or I'm sorry, another second or two, and then we'll start talking about it, and I'll get the tabs going so we can cover some things. And then we'll get into the charts, as I said. So sorry about that. Not sure what happened with Zoom. There was a little issue that cropped up. I think I'm here. Yes, this is where I am. So I'm going to start out in the with what we normally check out in terms of market rebellion, what we have coming through there in UOA Elite. But the review and summary goes like this. So we discussed our in most cases scenario, most favored or most likely scenario last week, and that was really that when you get that extreme overbought, you usually get a pause or a pullback. And so that really happened, right? They came after stocks very quickly at the start of the week, and other than maybe Thursday, I think it was definitely more of a seller's market for much of the week. And so that really played out, and I think that super overbought readings made that a lot easier than it normally is. So that's one thing. The VIX seasonality really is still begging us to go long where it makes sense. So this is still the case. That's something we hit on last week. Let's see if I can, where's that at? I think it is, where do I have that? No, is it here? Oh, there it is. Yeah. So this is just on Twitter, obviously. So yeah, the VIX seasonality, there you go. Still the case, right? We noted this. Like, I would personally, back in my old market making days and desk days and stuff like that, when I was trading different styles, I would be loading up on months like November and February, March at this point, and getting ready to sell things in front of earnings when we start to see some volatility spikes. That way I've got hedges on ahead of time, which is important to note because we could be seeing, right, a pre-EPS run soon, which we'll get to. So a few weeks back, we noted that the gang really needed to broaden the rally out. This goes back probably many weeks, honestly, maybe a month plus, can't remember. But the point is they did do that. We had to acknowledge that. But we did note it had a forced feel to it. I still feel like it did. You know, I'm not trying to be a reluctant bull. It's just that I can't get that bullish when just the nature of the action just told me it wasn't as I don't know, authentic or legit in terms of its long-term commitment. That was my sense. Many sectors backed off last week, and new highs and new lows were not all that great. So a lot of things went down, and in terms of readings, clearly some stocks and some sectors. So it really wasn't all that great, but I think you have to expect that after you get what we did. And we've been checking these out. So the percentage of stocks above their 20, we did note that you were getting up there. You can get a little higher, but you really did get up there. And that played out, right, where you saw there's corrective activity there where they dropped the hammer on some stocks. Just for thoroughness, we'll take a look at the same concept, but with respect to the 50-day, and you see a similar development there. And then the final one we usually check out is the MMTH, and that also came off. So this was probably the one that was furthest from really being super crazy. So, not the biggest deal in the world, but the other two definitely backed off. I think that was, as I said, I think that was your most likely scenario. That's what you see in most cases when you become as overbought as we did. So I think that was one of the easier, calls. You don't know, of course, for sure, right? That's always the issue with trading. You might have this sense to it. You can go with it when it starts to unfold, but you can never know for sure that most favored or the most favored or most likely scenarios are going to play out. So we did have a melt up prior, and we've been wondering about that. We've been wondering about the sleeper scenario as it's become known. I don't know how that came into my mind, but that's what I looked at it as, because I felt like a lot of people were not discussing it, and it just felt like something that I've seen many times. And that really comes back to the getting more the frustration sometimes with think or swim switching over to percentages on me just gets under my skin. But it was really about, I think, this high here at 431.73 being exceeded as it was, and really sort of forcing capitulation, because this high here was part of the bear market downtrend resistance line. And so to get through that, to me, it's the first high really that you were able to take out that was not something that you formed on your way back up. I would consider this a minor. That was more of a major high there to me. So that is what getting that far is probably something very few people would have believed given in October at the lows, right? But that's what these guys are capable of doing. We talk about it all the time. It did do that. You could see the support line that I've had there, or I tweaked a little bit, and you crack below there, and now you've come into the 15 in red. And so I think just quickly while we're here, I think I would just note that about 429-ish, that's right around where your rising 20 in light blue is, right near there. There's sort of a little bit of a mini flat line that got established near there as well. That flat line probably has some other data that made it bankable in the past, which I'm not even going to get into. But that could be an area where if they do continue to sell a little bit, that could be an area where they try to put up a fight. So keep an eye on that, is what I would say. That kind of 429-ish area might end up being a big deal. Unfortunately, Thinkorswim switched me to the percentages again. But yeah, you can see that blue that blue box is highlighting the 20 SMA there, the rising 20 SMA there in blue. And I would say, look, if you don't hold there, somehow this market really starts to become, unraveled, then I think you're looking at this gap fill. I think there's a gap. Well, I shouldn't say that. 423.95. No, there isn't. So that does have overlap. It doesn't look like it, but it does. So regardless, that's sort of where the 50 will be, I think, if it were to fall. So I think your 50 obviously becomes your next big area while we're on that. But that sleeper scenario also included, right, that they then sort of put a rug pull together. Now, this is exactly why this game is so hard to call, I think, long term, because if you look at it, right, you've got a situation that you have a scenario you've been expecting, but this potentially, and then you get that scenario and it looks like they reverse this thing down hard from there, and they really could put a rug pull together. The problem with that is that it might not have happened at exactly the right time. In other words, right, we've got the end of Q2 coming up, and obviously anybody that's traded knows that these window dressers love their job. So I would be a little surprised, I think, if they were to let this thing really get rocked down to the 50 SMA this week. And that would really, I mean, that would be a strong rug pull right from that super overbought area where they put the highs in, where they initiated that sleeper scenario. And that's what we were thinking, but I am not so confident in that now because I think there's catalysts, and I think the catalyst is they've got the end of the quarter, which I've noted in our notes. They also have the pre-EPS runs. So we know that they like to run and gun if they can in front of a lot of the earnings that start coming out, which, you know, we're probably about 3 weeks to a month away from that starting to really tick up heavy. And so that's part of it. Now, the mega caps, which we'll talk about, are also part of it. So we have to focus more on the sleeper scenario, excuse me. But we have to also do it within context, excuse me. So the context is this got ahead of itself. I think I may have set my Bollingers back to, no, they're still on 3 on this view. Must have been another view, but that's really, really stretched. That's really, really stretched. So this thing coming back in from there isn't crazy. It's just that you got the end of the quarter window dressing. You've got the possible run up, you know, in front of earnings, those kinds of things. So we have to just be respectful of that. So what I think you have to do this week is you've got to take it as it comes every week, of course, but you really have to take it as it comes, because you can make an argument that the spiders have backed off from very overbought conditions, and after even maybe just a little bit more, they could pull in, find support, and after really several sessions of being leaned on to the downside, they could try to put a little rally together. Now, what becomes of that, right? Is that something where it starts working its way back up towards the end of the week, and they kind of create this possible double top or possible breakout? There's so many scenarios at this point that I don't really have a strong one I could say, well, I should lean towards. I don't think you could say that for sure the selling's over. I don't think you could say, especially with something like KRE brewing, right? So you've got this rolling over again, something that, you know, I've been talking about for a while, that Ryan and I just don't think this is over yet from what the reading we've done. Maybe it is, but we'll find out. I have a position on in there. It's a very low risk position. I'm waiting to morph effectively. But the point is, this is happening again, where this is losing all the SMAs and it's rolling over again. I don't know. Does it come back and visit the lows, maybe take them out? Don't know yet. We'll see. But the point is, right, that's an area that could be dicey. So let's get back to the browser, and that is right here. So the other factor I should mention while we're here is that, look, the current target rate is between 500 to 525. And you look as though there's a 72% chance that you're up from here. And that's going to be in about a month, right? So rates are not coming down quite yet. And I've been saying this for a while, but the rate talk was, oh, there could even be a cut, you know, and in May, or if not May, June. Well, it's not materializing. So this rally is in the face of, right, higher interest rates, which I think are going to eventually cause big problems. I'm not so sure that they should continue to increase rates the way they have been, but look, I don't have the inflation data, and I don't really have all that at my disposal. So I'm not going to act as though I'm a rates expert. It's just kind of like man on the street take. But if you go out and even just to the next meeting, you're still favoring, right, a 75%, roughly 76% chance of being there or higher. And even by the end of the year, they've got this, right? So you definitely favor, they're still favoring going up more, and maybe even a couple of bumps up as of right now. So I don't see how this jives with things. I've been saying that for a while, but again, we don't trade it that way. don't fight against things. Here's the current look at the fear greed index, something that, again, we mention every week, imperfect, but at least you have something to work with. And this, of course, backed off after really a week of selling. So this one here, is barely out of the extreme greed reading, but I'm not sure what what backed off. It looks like stock price breadth is what dropped, and so did safe haven demand, and so did junk bond demand. So those all backed off, but you haven't seen enough from other things really to help it get even lower. The timeline looks like this. So we've covered that, but that was sort of, we noted that, right? That's why we follow this, that when you get up here, sure, you could get even more extreme, but you usually don't get all that much more extreme when it comes to this kind of thing. So you can, 1999, 2000 sort of proves that. We talked about the VIX. Let's cover this stuff while we're here. Let's cover the AAII, sentiment survey, optimism above average for the third consecutive week. Notice, right, the 1 year bullish high was almost a year ago. I'm sorry, I thought that was 22. This was only a few weeks ago. So we did, when we were at the extreme, well, actually, the way their data flows, it's last week, so my bad. But yeah, they had this up here. So you did back off a little bit, but you're still pretty high, right? Overall, the historical average is here. So again, it makes the case where you could see a little bit more back off, but which I think if it were not for these potential catalysts, right? If it were not for the end of Q2 window dressing potential, if it were not for the possible run into earnings, I think I would be saying that the most likely scenario in my mind would probably be they try to rally at the start of the week, and then that doesn't work out so well, and then by the end of the week you probably correct a little bit more. That would be my way of looking at it. And then who knows what happens after that. We'd have to get there and see how the price action shaped up. But I would think, hey, they try to rally after mainly being sold off for 5 days overall, and then it fails, and there's a little more corrective activity. They either hold 429-ish, or it cracks and then it opens up another drop right down further. So that's where I would be, but it's hard to be that way, again, because of what is looming. It's just very hard to be that way for that reason. So let's go back to the browser on, that is here. So let's again remind folks that don't see this all the time. We've noted this because this is really how the year's been tracking so far. Note that we're in that pre-election year, which is year 3 on here. And that is better than any other year by far. In fact, it's almost doubly as good as next year, right? So I think a lot of people like this stuff. A lot of people believe in this stuff. A lot of people put money to work because of this stuff. And here's the pre-election normal, right, seasonal patterns, right? So we could see, again, you kind of have this like little rise into, after you correct in June, which kind of late June, which we just did, you start having a little rise, and then they continue that. So that does mean, right, that what we're talking about with respect to catalysts and their motivations, we're not crazy. Like, this stuff does tend to happen especially like in this year. It probably happens in a lot of years, but really you can see that this is pretty darn effective. And then you get this. So they price probably a lot of great things in. The old buy the rumor, right? Buy in anticipation, sell on news, sell on reality, whatever. And you back off, right? And then you have your typical summer stuff happen, your September stuff. And then you kind of get that scare, and then they make sure that doesn't get too crazy. And then they goose them really right from mid to late Nov into the year end. Typical, right? So that's what this stuff is, to me, is worth looking at. But if you're not tracking that, it doesn't really matter. But the reality is we have to give it the benefit of the doubt until it really gets us off course. And it hasn't really gotten to the point where I was ready to call it off course and forget about it. But they resuscitated the market a little bit later than the price action seasonally. The seasonality historically traces out, and they kept it in line. And the sweet spot really seems to carry just a little bit past, right, the mid-year point, where you get this really great performance. And that's what we've seen to a degree. Now, there's a lot of things to quibble over, I think, and here's your election year and it just keeps going. So I don't want to discount this, right? I really don't like personally to let my opinion in terms of the macro econ and all that stuff really override scenarios that are definitely possible, right? I don't want those to dominate and just be beholden to that opinion, because I've seen it too many times where the market just doesn't care about the reality, and you've got certain factors that are just creating this type of stock market behavior, price action. And we're as traders, most of our strategies at Market Rebellion are momentum oriented, right? Other than the premium collection ones. And so we're trying to make money from these price changes. And if they're going to be there, let's do it. But we are coming up. Let's also note that we are coming up to, after earnings, probably a little bit of a listless period. Typically, and again, geopol, whatever, could change this quickly. You could have domestic news, whatever. It's but then you really get towards the end of the year, you kind of put in the low in the fall and they start goosing. But we're good, according to this, for a while. Now, we did talk about the mega caps and how do they do? Well, some of these mega caps, which I'll bring up on the chart, these things have had they've had a really great run this year, as I think almost all of us know. You made I think it's a new recent high here. Let me see about Apple in terms of the all-time. Is this also an all-time high? Let's just bring up, right? Yeah, and it looks like, right, if you go back, I think it would make sense that it is, and I thought it was. Yeah, so they've got that happening here, right? So you've got Apple making a new high, and I don't want to go through all of them quite yet, but this is the rising SMAs. You can see all those SMAs are rising. All of them are stacked in slope, with the shortest above the next longest, above the next longest, and so on. And so, your technical profiles don't really get that much better than that. You really, in my experience, and this is just one way to look at it, but it's a simple, easy way to look at it. And how can you really say that the biggest stock out there, right? How can you really say that, no, things are on the verge of falling apart when you've got Apple, right? Let's look at Meta. I believe Meta also could be either near or at or not far from an all-time high. Let me just double check on that. Oh, my bad. Okay, that's just a recovery high. So that's got more to go. But this chart, if we look at it, we just pull up a 1 year, get us there. I mean, again, it's very, in terms of the technical profile, I need something to start to hang my hat on. And I mean, that kind of performance where you come back only to the 10 SMA and you hold, what can you say about that? You really can't say much, like, oh, that thing looks terrible, because why? What's your justification? What looks terrible about it? I mean, you might not like it for some other reason. I mean, I hear you on that, but in terms of starting to go short all this stuff, I like to wait until I've seen some signs that things are faltering. Now, you might have an indecisive candle here in Amazon, but this also looks like a new recovery high in another massive, right, mega cap. And it is, right? Since the October lows got put in, this is a new recovery high. So when I look at all these, and I think I've got this listed of mega cap leaders, they don't look ready to deliver that sort of second half of June. They give it back because they've had a good year. I mean, they may still, who knows? We don't know what news will come out. I'm just saying, if you look at this snapshot in time, I don't see anything awful yet. I don't know if the market will somehow, later they'll try to seize upon the futures and go with this Wagner Group, Russian coup story that they're trying to put out over this weekend. I don't know. I mean, maybe they will. But the bottom line is, as of right now, where we can look at it and not knowing how the futures will react, this, to me, I just can't start shorting this thing yet, even if I didn't like it. So I'm much more inclined to say, look, we maybe hold our opinions. We hold these macro opinions, but I just can't go against the technicals. That to me is the big mistake, to let your macro take override what's happening technically. Like I said, I would much rather start to sell when this thing rolls over and starts cracking. And I think it's really finally the time to sell rather than fighting it while it continues to go up. That's just the way that I prefer to do things. But I don't want to go through all of those. But yeah, a lot of these things, like Microsoft's in a little triangle right now. It's another big one, right? This is, remember, these are all these big weights. So there's a little bit of hope in Microsoft, I think, because it's got this really tight recent structure between support and resistance. So, but if it breaks out to the upside, right, and they keep running this market, they could, then that's a big deal, right? That could lead to something. So keep your eye on that one this week. If you're looking for a breakout or breakdown there, you could get something interesting, and that could be an area where you you set alerts and get ready to go. Now, remember, you can always have a false breakout or a false breakdown. So you don't want to get too ahead of yourself. But here's another stock that I think also is, I'm kidding around with this word, but triangulating, where you're not too far from the apex. And when you get this close, you ought to be able to you ought to be ready with alerts, right? If you want to trade these names, they both have downside gaps. So I think the potential's there. We selected AMD this week, even though we used it 2 weeks ago in Rebel Pit Pro, which is, probably our main directional trading service for folks that are newer. But we use this because of the technical juncture it was at. This is Friday prior, and then this is Monday's action. So we made our selection. Wait, is it? Hold on, my bad. Wait, no, this is Friday prior. This was Monday's action. So we made our selection, I think, on Monday, and oh, wait a minute. Why do I have bad? What do I have in there? Oh, I'm forgetting about the holiday. That's what it is, right? Am I forgetting about the holiday there? Yeah, that's what it is. So this is Friday. This is the first trading day of the week. We made our selection on the holiday because we had to publish it, and so we just saw the technical juncture, and we said if they start to rotate out of some of these big semi names that have ran, then this could really fill this gap, right? That's what we're trying to get. You don't always have those junctures where you've got very cheap vol. We try to use dollar strikes, dollar wide strikes, all the stuff we try to do to make it an easy trade with really good potential. It's not always at a really great juncture, but that's what I would keep in mind with AMAT and Microsoft. So, right, because you've got that potential there with those downside gaps. On the flip side, with all those other mega caps going up, if Microsoft especially, right, starts to break to the upside and they're running Apple, which I think they could. I did see some EOA in there that seems to think, at least on the surface, that Apple could continue to run. And then you see Apple running, Meta continues to be impervious to anything negative, and you get Amazon going further. You could really have something there, and they might just come after Microsoft for the sake of basically because, hey, if Microsoft hasn't ran, let's jump into there. And that's maybe what could happen. So let's make sure I'm covering all these things. So, yep. So that's where we get into the mega caps, right? Could they retrace like they have in the last 10 years in the second half of June or not, right? Which we just covered. So we looked at those charts. We did go to DEF CON last week, which is probably a good move given what happened in the market. Like I said, I think it was one of the easier kind of most likely scenario, most favored scenario type things that we've had to call last week. I mean, recently. The rally to me still caused capitulation. I still think there's a lot of people that had their arm twisted to get into this thing. I think a lot of money's gone in. I think the long equity exposure is still very high. I do think those people are trapped if, right, the economy goes off the rails and people start worrying about risk again. But for now, they haven't really done that all that much. I mean, the VIX closing at 13 was probably a win in front of a weekend, but it did trade as low as 1273 or I should say it did flash as low as 1273 on Friday. So I still don't see any great stuff out there in the economy. Maybe things aren't getting so bad yet. Maybe that's something you can hang your hat on. I just don't see anything that's telling me that with rates going up that we're really roaring. And I think there's certain factors in, say, things like housing and so on and so forth, where it's sort of panic, frustrated buyers that missed out. Now there's people that are, I think, builders building over the cliff, as I always say, at the end of a cycle, potentially, and there's buyers who should be more patient but don't want to be. And so they're doing their thing. They're going to finance at these rates, maybe hope to get a refi done later. I guess that works for some people. So that could be part of what's happening here. Remember, we cannot rule out beats, right? So I think that you could get even more euphoria. I don't want to come out of this week sounding like I'm super bullish and have people think that I'm, hey, I'm really a bull. Wayne's not as concerned. I'm just trying to balance out the concerns we put in the market outlook overview. I'm trying to balance all this against the possibilities on the other side, right? That you could get these catalysts where they use the price gouging, right? I'm calling it like higher inflation is dropped has hurt the consumer, driven up retail prices. And those people, a lot of people are just paying it for now, right? Because they probably feel squeezed, but they still have enough collectively to absorb the pain and just buy it. Like I'm officially not, it has nothing to do with my income or something along those lines, but I'm boycotting Chick-fil-A because I refuse to pay twice as much for, and I'm not a fast food person, but it's the one place I'll stop at if I'm doing some traveling that tends to be more considered fast food, but not anymore. I'm not paying $14 for a few nuggets and a fruit cup and a lemonade. I'm just not doing that. That to me is utterly insane. But I do know that I'm sure if they're still doing well, people are just biting the bullet and just paying them. But at some point, I think people start making other choices, unfortunately. So I don't think this is really due to great forward EPS that could be sustained. In other words, like this rally could be all about, jamming in lieu of really great economic things, and they're developing. And that's why you get this big valuation jam job to the upside where they price in this perfect scenario. But I don't think that that's the case. I do think that's the case at this point, more so than the other side, which is, hey, this is permanent. They're going to be able to hold prices up here, even if the economy deteriorates. Like, I think this is one of those times where if you do get the economic rollover and you do get something more akin to a traditional recession that lasts for, a year or 18 months or whatever, 9 months, something like that, I think some of these prices will have to come down because a lot of people are probably so stretched so thin. That's just my take. It's not really like based off of, it's more just from general reading more so than anything. I don't have any real proof of that. So this chasing of things and extrapolating all this wonderful stuff, I think they're still ahead of themselves. I do think they're extrapolating too much good news. We've talked about the 99, 2000, 1987 due to the rising rates and the market not caring for a while. So I think they're betting on the consumer, as I said, being gouged, and it could look great a little bit longer. Like I think you could have another quarter or two where the consumer hangs in there. And of course, the usual suspects will be bandying that about. It'll be very celebrated. This is the kind of stuff that goes on, and you almost feel like you're in the Matrix at that point, because no matter these financial television people never seem to learn the lesson, right? Although they always try to sell it as though it's something wonderful when it could be towards the end of a cycle. Could be. It's not, and it's rarely like that reservations are really aired, right? They don't really share a lot of their reservations. Well, this could be a late cycle. This could be the end of it. No one really gives those people a lot of time to come on and say that. But that's always been the case. I just wonder, like, right, how do you keep doing the same thing over and over again? But yeah, we talked about panic buying. We talked about supposedly liquidity, right? It's supposed to shift to a headwind. That's been talked about. Again, I don't see it really dampening things yet. I mean, maybe it just started with last week's action, but the pullback that transpired really is not so easy to focus on the most likely scenario, because that pullback we got last week was a legitimate pullback from a very overbought level. I think it made it easy for us to say, look, the really most likely scenario is to come back in somewhat, or at least pause up here and not really go that much further. And they did. They brought it back in. But now, right, there's so many things. Do you drop a little further? Do you find support again near that 429? Do you find a way to take this line and then you kind of have one more little, you put a little reversal together and work your way back up through there? And then I would probably say about 437 would be the next one. And then does it try to come up and flirt with these highs potentially? Does it barely exceed it and roll over? Does it come just under and roll over? Does it not even have the gumption to get all the way back up there and puts in a lower high and we have another leg lower? There's so many right now. And I think these catalysts make it hard. So we have to be really ready for more nimble, take it as it comes, and just stay very on top of your position management. I don't know what else to say at this point, because probably, like I said, without these catalysts, I would say, yeah, you probably come in at least a little bit more. And I would say if 429 doesn't hold, you're probably going to trade down to at least probably like another percent or just a little shy of there. And if that doesn't hold, then definitely I think you're coming in towards the 50, not exactly at the 50 right now, but towards the 50. But I can't say that yet because of these catalysts, right? I think that's my problem right now. So let's see. So yeah, we're still near extreme greed. Like I said, the window dressers love their jobs. Again, pre-holiday and pre-EPS runs could develop. That's why, again, sleeper scenario is still there, but it might be at the wrong time because they've got these catalysts to work with on the upside. And now the big question is, like, I think the big question for the week is, can they bring this back to where it is, just above, I think, support, or will they bring it back a little further, kind of to where there should be support, maybe 430, 429-ish, try to hold it there and try to go. Can they do that? I think that's the big question. I think with the catalyst, you have to say that could be one of the most likely scenarios that you've got to give it credit for. Another one, of course, would be it doesn't hold there. And like I said, we get a little bit more selling. So you just got to see, I think, how it reacts at the next big support level. For all I know, they start jamming it right back up. Monday morning, we're already gapping up. I mean, I'm just saying, but for now, this is what we've got to work with. So that's it. So sleeper scenario there, where I think if it were the end of May, early June, we could see more of a whoosh lower that gets a lot of these people worried that did I really panic at the wrong time and go long too much too soon. You get a little bit more of a flush, but that still could happen, right? I don't want to say I'm abandoning that scenario. I'm just saying that we have to be respectful again of these catalysts, and that's what is the monkey wrench for us, unfortunately, this week. So things are still overbought overall. We saw that kind of with CNN, but I would say, look, they did back the spiders off. So a lot of my intraday charts are on the RSI. A lot of those that are kind of the heavier, as I call them, the heavier duty ones, half a day, 4 hour, 2 hour, things like that. They're all 50-ish or below. So that's a big back off in just a week's time, 5 trading days. So you can't really say, well, this thing didn't correct. It did. And a lot of times when you're really in a very bullish mode, as we have been, you just don't get deeper corrections as well. And sometimes you do, but not always. So that's the thing. You've got to just take this as it comes. I think it could be a dicey week. UOA was very quiet on some days this week. I was very surprised by that. I don't know if they're waiting till this week. They don't want to commit just yet at these levels. They don't want to fight the trend. It just was extremely hesitant, and it's been really quite a year. I mean, the activity's been excellent overall for the year, I think, but not really anything extraordinary when it comes to the last week and maybe even a couple recent weeks, or at least a few days during the week, just really didn't have much going on. The Qs have also corrected, and they found support on the rising red 15 SMA. The 20 is just below there, and that dovetails with a little mini flat right near 357. So you're looking at another percent and a half. I think that's your big area, right? That if you do start out more with a little bit more selling, you've got to see how this thing reacts around the 20, just kind of like with the SPY, right? If they back it off to there fully, then what happens, right? We got to see. Now, if they did do that early in the week, at that point, because we've been sliding significantly, each one of those probably gets into oversold territory quickly, right? So if you slide another percent to 1.5%, I'm going to say some of those short-term charts, like the 2 hour have intraday heavier duty intradays, they're going to get oversold at that point, probably, or at least close to it, depending on how severe the action is and how fast it happens. But if that were to happen, right, that, and you start seeing it holding on, knowing that they've got quarters end, knowing that pre-EPS in front of what are usually beats, right, that could start to happen in July after we come back from the holiday. So just keep all that in mind. The interesting thing is, though, QQQ and SPY look really good still. They did what we thought overall would be most likely scenario. They're holding. We got to, again, evaluate them very closely and be willing to go with the flow, probably more so than your average week, because it's tough to make a strong lean. But IWM is an exception to that. IWM continues. Again, this is part of my I can't believe in this bull market yet thing, because I don't see these small caps really pulling out of, well, they're kind of stuck in the mud. Like when the market rally, yes, it did rally along with it, but it didn't really do anything in terms of reaching a new recovery high or taking one out. So this continues to be sort of like a sore spot. Could be related to the KRE situation, where a lot of these smaller banks that do business with some of these smaller companies, and that's what they specialize in. That could be part, and they're worried about credit crunch. There's so much out there. That's why a video like this is never easy, because you don't want to talk about every little wiggle, waggle, nook and cranny, but you get the idea. You have to mention some things that are possibly pertinent. Diamonds, though, let's take a look at those. And this was interesting too, because these are not lighting the world on fire. The industrials, which were going bonkers, that we did have some, I think, pullback in those that did affect this. So that had a nice correction. And like I said, we probably one of the easier weeks for us to come up with a most likely scenario really was last week. So this is maybe a precursor. We'll see, right? This is found support, held near the 50 in gold, the 20 in light blue, held above both basically, or right near the 20 at least. And so now what happens, right? And that's an indecisive candle as well. So you don't know if you're going to springboard, fall again. You're going to springboard right back into keep going towards the end of the quarter, so that all these wizards look like the geniuses they think they are. You just don't know. So it's a tough week because of that. And I hate to belabor that, but it's just so true. What I would also bring up here is, I don't think I did, so let's just take a look at Google or Goog. And this one's been a real dormant name. We saw some EOA. It didn't do much. Was disappointed in that EOA. I thought that was the start of something. But this has not been easy to trade. As you can see, it's been in a range. Remember how big these are, Google. And so this is one that they probably would like to get going, right? If they do go with that scenario where they start marking things up, they're set, right? Right now, like I keep noting this, but you're just on the Apple, on the Meta, on some of these things. It just, the Amazon, it just doesn't look at this very moment in time like they're ready to just start sliding immediately. Again, the weekend news could cause that to happen. NVIDIA, right? That's whole, like if you're trying to say, well, it's overdone, no doubt about it. Does it have negative RSI divergence? Yes, it does. Could it try to follow AMD a little bit lower at the very least? Sure. So I think you have to be ready for that. But again, at this moment, it's holding above everything's stacked and sloped there in terms of your SMAs, and it's holding above the shortest term one. So it hasn't cracked anything big yet. You could say, well, it cracked my support line. Okay, I like that. I mean, that's one thing I like to look at. So if you want to draw your support line, say, look, it cracked, I'm going short against the high. That's good. You got, like I said, you got negative RSI situation developing there with a higher high. So you got your bearish RSI divergence. I like that, right? I would take a shot on that, but in terms of, I wouldn't overstay my welcome. Here's SMH, and unsurprisingly, that does look very similar. I think it does have a lower RSI reading here versus here. And there's a gap there. So there's a lot of potential for the downside as well. But again, does the gang let that happen right exactly when it would be bad for them? I think, like I said, I think the rug pull would be there more. That possibility for a bigger rug pull would be there in the sleeper scenario we've discussed for months and months and months without the catalyst. So I don't know, maybe they let the catalyst go and sort of a little bit more reality kicks in and some of these things give back more. But I think you're at such a tough juncture that you just got to wait, see how things start to unfold, jump on board, manage it with great discipline as best as you can, and go from there, right? That's really what I think you have to do. And I know that's not definitive, but unfortunately, right, you got to call it like you see it. And it's very stark contrast to last week's scenario where, like I said, easier than typically is the case. I don't have anything here because of those monkey wrenches in the forms of those catalysts I've discussed to death. So that's where I'm going to leave things. VIX, nothing special happening with VIX. Yields, nothing special. Dollar tried to rally late in the week, kind of turn around. Maybe there was something to do with the Russian situation. Not sure. Sometimes people just get ahead. Obviously, there's a lot of UOA at times. You just wonder coincidentally, like what wonderful timing. How did that happen, right? So, but again, they did start going after the dollar, and there was kind of like very strong European weakness that carried over to our market and created, I think a turnaround for what they were trying to do in terms of a Friday rally attempt that could have been in the cards, but they really held stocks down for the most part after that midday rally, that too early rally, and they sold them off again with the dollar up. And I think maybe that's what helped the VIX is that there was someone that got wind of what could happen. You just never know. Unfortunately, it's hard to really pin that down, but I've seen it too many times that I can't even remember how many times I've seen things and you're like, oh, that's kind of interesting, but that's what they do. That's what they're good at. So I hope that something that I covered and shared with you this week helps you out this week or some week in the future. I want to thank everyone for tuning in and stay nimble out there because this may not be an easy week. So thanks again.